Hi everyone, and welcome to Accounting and Accountability, the regular show where you can learn about everything accounting and how we can use accounting to view the business world. My name is Dr. Amanda White.
And I'm Dr. Nelson Ma.
Wow, we're outside today.
Yep.
Because
weather.
the weather has turned nice in Sydney, and I've got my sunnies on.
Yes.
And though it is a tiny bit breezy where we are.
It's a little brisk.
It's got breezy since we've started.
Yeah.
How are you doing?
I've been well. I just had a really busy week.
Yeah, congratulations on the UTS case competition.
Yep,
And which university won?
Queen's University. So congratulations to them.
What country are they from?
Canada.
Okay, so Queen's University in Canada. Big shout out to
Great
them.
presentation. Really impressed the judges at QBE, our major sponsor. Thank you again to QBE for.
And to the Cerebral Palsy Alliance, who was the
Cerebral Palsy
minor
Alliance.
sponsor as well.
The minor sponsor.
Fantastic.
Yeah,
So
it was a really great
you can check out the case competition and more about it on their LinkedIn page, their Instagram. Do they have a Facebook page?
Yes.
Okay, so just search UTS Case Team and UTS Global Case Competition on social media, and you'll find out everything about it and how, if you're interested, you can get involved with the case team. Join Nelson and the crew involved in doing all these different cases. There's travel opportunities, and it's not just accounting students, right?
No, it's students from anywhere in business and any area that consulting is really broad, so it's not just about accounting, it's about finance issues, it's about marketing issues, about management issues. So anything that you're interested in, there's sort of an area in consulting that would be interesting to you.
And I noticed for some of the overseas teams and even some of our domestic teams, shout out to UNSW in Sydney that sent teams locally, is that there's also a lot of double degree students, so combining science and technology, engineering expertise. So it's really about having all these different ways of thinking, which is really awesome.
Absolutely.
Now, we have two stories for you.
Yes.
One is one that I've heard before, but probably not a lot of you out there, because you're probably all way too young to remember this. Nelson will be too young to remember this. But accounting firm Ernst & Young, or EY, is voting internationally on whether to split their business, the audit and the advisory parts. So Nelson, when are they going to, why would they want to split?
So there's been a lot of concerns about the quality of audits. So if you follow the financial news, there's always discussions about all these corporate collapses. Like in the UK, there was Carillion and BHS that recently collapsed, and there was a lot of fingers pointed towards the auditors and how it seemed like they weren't able to predict all these corporate failures ahead of time when they should have, because part of auditing is
looking forward and seeing whether anything seems
evaluating
unusual.
going concern, identifying fraud, and these things weren't done well. So the view is that this is partially because these accounting firms, they also sell other consulting services, which most of us view as more profitable than the auditing.
Audit's a low cost thing.
It's a low cost,
right?
low margin thing.
People get an audit because it has to be done for a regulation, but they won't pay a premium.
Yeah. So and so the concern is that, well, these accounting firms are just too busy selling other services to do a good job doing their audits. So by splitting up the audit arm with the advisory arm, potentially the audit arm can then focus more on doing audits and not have the concern of and not have this sort of perception of a lack of independence when they're also trying to sell
and
other
this
services.
is not new either, because if you look at the Sarbanes-Oxley of 2001, we have been through this before, when PwC, all of the big four, sold off their consulting arms. PwC Consulting was sold to IBM, and so all that's happened over time is they've sold off or spun off their consulting businesses, and then over the last 20 years built them back up again to the point where it's creating a conflict of interest, and so they're going to go through the whole process again.
Yeah, so if you were to talk a bit about sort of the conflict of interest independence part, like in accounting, how would you talk?
Well, it's this whole idea that, the auditor is meant to be reporting independently, and can you be independent when you want to keep this client on to be able to sell them other stuff? And the idea was that when you sell off consulting to somebody else, then you no longer have that incentive. Now, after 2001, where we had Enron and WellCom and HIH Insurance here in Australia, the firms tried to create internal walls and silos to say, oh, the auditors don't speak to anybody else. but they realized that audit's not profitable that way.
Yeah.
You know, it becomes profitable when you can sell them other services. So we've just got very short memories. And those of us who are in the market, have been in the market for a long time, will say, well, you know, what's now going to be the difference between EY audit and EY advisory? Where do your tax services sit in there? How can you be sure these people won't still play golf with each other, go sailing, have drinks, you know, refer work to each
Absolutely.
other?
But I guess within accounting, there's a lot of sort of independence in appearance that we try to maintain. So
independence in appearance and in fact. And look, the evidence is sort of mixed, because a lot of the Australian evidence from research, and this goes right back to Caitlin Ruddock's work, I think, on non-audit services like 20 years ago, which said that we didn't have any independence issues here in Australia. The quality of our audits wasn't impacted to the same way that it was in the US. So it's very interesting, and you know, those of us who are old enough are going to see if history will repeat itself. Come back to the show in another 20 years' time. If we're still here in 20 years talking about another hive off of consulting services, that'll be quite hilarious, because you know, I'll be super old and wrinkled, and Nelson will still be relatively young.
I don't know about that.
In the game. We can't talk about EY, of course, without bringing up the serious issues that are occurring at discussions within EY, within Australia at the moment. A young woman took her own life at the office. We don't know why that occurred, but there's been allegations around racism and bullying at EY. There's a lot of discussion within the whole sort of Big Four and audit world about the fact that the Big Four do expect you to work really long hours. Pay at public accounting is less than in finance and in corporate sort of commercial accounting.
It's getting better.
It's getting better, but there's still lots of challenges. And so I think it's really, we'll wait and see what the firms do next in terms of managing better workload, treating their employees appropriately. You know, I've had a lot of people reach out to me with sort of pretty terrible stories, and my recommendation to anyone who's out there working in public accounting, or you know, in a commercial sense, and you're experiencing racism, bullying, harassment, make sure that you report that to your HR department, and you know, just keep pushing for change, because I think this is one of these things where managing mental health is really, really important. We just had Are You OK Day. It's not going to be solved by cupcakes, but it's going to be solved by real cultural shift and change. So we hope that we see changes coming at all the Big Four to manage that work-life balance for employees. Now, onto a slightly different track, and I say track, Volkswagen, that owns a range of car brands. You are now going to be able to become potentially a shareholder in one of their brands, Porsche. What's happening?
Yep. So Volkswagen, one of the largest automobile manufacturer in the world, well, they're planning to list separately one of their subsidiaries, Porsche. So we all know Porsche for their, their really bright red, sports cars, and
I'm pretty sure that the bright red sports cars are Ferrari.
Well, they have bright red sports cars. They have their Porsche, the 911, the Cayenne, all those all those cars, various colors.
I would never be able to afford to buy Porsche.
Yeah, no, neither would I. But and it seems like an interesting time, because we have the motor industry, which has suffered a lot in the last couple of years. We have the supply chain shortages,
fuel price changes,
semiconductor shortages, and just the general economic downturn that sort of hit the motor industry pretty hard. And VW, their stock price dropped about, like 30+% just in the last year. Well, but however, there is sort of some light at the end of the tunnel. Well, what we have happening right now is VW is actually investing a lot in electric vehicles. And the electric vehicle sales have increased about 27% year on year. And they're hoping to invest more in EV technology in order to sort of increase their market share in the area. And so that shift in, their strategy has meant that they can no longer prioritize or focus on a brand like Porsche, because obviously they're associated with petrol engines and high performance. And so,
I think it says 25 billion. So they're thinking of they should make 25 billion. There's a lot of Porsche fans out there. who will invest to be a part of a brand that they love.
Yes.
I'm pretty sure shareholders don't get discounts on buying cars. No. But it's an interesting approach. Businesses have two ways to raise capital to be able to afford to go into new areas like focusing on EVs, and that's from either getting a lot of debt or by issuing shares. And so the sell-off of Porsche is an interesting approach to this.
Well, this what's really interesting is that they're thinking that if they spin off Porsche as its own company, it could be worth between 60 and 85 billion euros. Interestingly enough, VW with Porsche inside it is worth 85 billion euros on the stock exchange.
Hang on. That doesn't make any sense.
Well, this is what's really interesting.
So it's untapped value that's not recognized on the balance sheet that we wouldn't recognize until you start issuing shares.
Exactly. So what we think is happening here is that, well, Porsche, although they only make up about 2 to 3% of all VW's sales in terms of volume, they make up 1/3 of VW's profit. So they're so Porsche is highly profitable.
Yeah.
So a lot of the money, so by spinning off Porsche into its own brand, that brand is already going to be a highly profitable company in itself.
That means that I think VW's going to need to think really carefully about how they move forward, because they make a lot of diesel vehicles for heavy industry or commercial industry. So how you think about changing that, and my kids are like, hey, when we buy fuel, we're like buying dead dinosaur farts. It's how they describe it. Sure. So it's certainly going to be interesting. And when I think about EV as well, I think about who's investing in charging infrastructure.
Yeah.
Because there's nothing worse than if you buy an EV. I think I saw an article about Hyundai. Someone bought a Hyundai, they went on a long trip, and there weren't enough charging points or fast chargers. And so it almost feels like if you're going to buy an EV, you're sort of locked into Tesla, because Tesla chargers are everywhere. Yeah. And they've really put the money into infrastructure.
And I guess that's the whole point with the Porsche spin-off, is that if they can raise, $20-30 billion in extra funds, they can take that money and invest in EV technology, and that means more charging stations across Europe and hopefully more.
Hopefully, we see more government charging stations as well. I know that our relatively new Labor government is keen on moving more into EVs as well, which makes it really interesting.
Yeah, and I think the valuation. So what we're going to see is two companies, Porsche and VW, that are worth more than the combined company.
That doesn't make any sense, does it? It's counterintuitive.
But I guess it's the fact that there's this huge opportunity for VW in the EV space that now they can invest in with the extra Porsche money, and Porsche itself can then focus on what they on expanding
specializing on what they do best.
Exactly.
Yeah, fantastic. Now, before we wrap up today's show, there are also some, big news is that we've got a new iPhone 14, a new Apple Watch, new AirPods Pro. I think there's a newer version of those. Yes. All much more expensive than before.
Well, this is what's interesting, is that depending on the country you're in, the price may or may not be higher. So in the US and in China, the prices are largely the same. Whereas in Europe, it's gone up about 100 or so US dollars for the typical iPhone 14. And in Turkey, it's doubled in price.
Yikes.
So these things have a lot to do with currency fluctuations. So in Turkey, the value of their currency has dropped to about half. So there's a lot going on in terms of the pricing space there. But I think the sort of static pricing across across the US as well as China has to do with them trying to get market share back.
They're trying to claw back from Android. So the Google Pixel is probably going to drop the new Pixel 7 later this year in October. Yep. Google has also announced that finally we will see the Pixel Watch. So far, I think you're on a Samsung watch, is that correct?
Android.
Android watch. So Samsung was the other big watch seller for Android users. So Google is dropping a new phone and a new watch. So market share is really important. And so these, they're using accounting information to make pricing decisions and combining that with economic information about, well, what could the market bear? How are, at the top end of salaries, if you're working in law or consulting, salaries are booming, IT, and those are the people more likely to be able to buy a new phone, so therefore they can afford to charge a bit more as well. It's that supply and demand aspect of it. Fantastic. Well, but otherwise we hope everyone is well. If you have any questions, just let us know, and we'll catch you next time.
Bye.